Bloomberg Audio Studios.
Podcasts, radio, news.
We begin this hour with Trump's Treasury pick still very much up in the air. Following meetings with Apollo's Mark Rowan and former Fed Governor Kevin Warsh, investors still waiting for President-elect Donald Trump to make a final decision on the individual who will go into 2025 facing down a huge to-do list. Joining us around the table, the IBM Vice Chair, the former National Economic Council Director, Gary Cohn. Gary, good morning.
Good morning. Thanks for having me.
Good to see you. Thanks for being here. I think we need to take a big step back, in fact, go several years back to 2016, 2017. Just frame for us what you had to face down in 16 going into 17 and how long the to-do list was back then.
So I think we should take even a bigger step back and remember what the environment was. If you go back to the economic environment as we were going through this exact period, we had a environment where we had just barely started to come out of the Fed's zero interest rate policy, quantitative easing, and a decade of Fed articles, will there ever be inflation again? We were just starting to turn that corner. We had come through an Obama 4 years or 8 years of basically saying, you know, there's been a very tough business environment, highly regulated. You know, how do we get business re-engaged? And Trump won this victory. It looks very similar to where we are today, except, you know, Fed funds were 76 basis points back then. They're 4.5% today. National debt was about 20 trillion. We're at $35 trillion right now. So we're in a pretty fundamentally different place. And then as you look where we are today, not only have we a pretty decisively different position in rates and debt, I think the president-elect is walking into an environment with that high interest rate environment where housing prices have gotten really out of touch for most Americans, and there's a real push to try and make housing more affordable. You look at the way Treasury has decided to fund that additional debt. They've been very short-dated on the curve, which I think provides an enormous amount of risk in refunding, and we all worry about refunding of Treasury, so I think we've got to have a real refunding situation where we roll out maturities. You know, I remember talking to the president like 8 years ago about doing a 50-year and a 100-year. I still think we should have done a 50-year and 100-year when rates were low. And then you think about the situation with state and local governments. State and local governments were not in great position 8 years ago. Now think of what's going on with the migrant population, how much money some of these cities and states have spent on immigrants. Now, they didn't say anything prior to the election, but I will be shocked if there's not a huge outcry from some of the major cities in this country about the amount of money they've spent and how much help they're going to need from Washington to make their budgets come together. So that's where you start. That's literally day one. That's January 20th, 12 noon, you walk into that.
Yep.
So there's a fundamental difference from where we are. But there's a similarity to coming off of the Obama administration versus the Biden administration, the excitement of business, the opportunity going forward. Those are the excitements. You know, then you go back eight years ago and say, okay, what did we walk into as well? Well, look, the number one policy that we really wanted to get done initially was tax reform. Tax reform was our number one objective. Unfortunately, you know, the House had sort of gotten ahead of the White House. During the last few weeks of the prior administration, the House had gone ahead with repeal of Obamacare. So we walked into repeal and replace without really a replace.
Which I have to admit, I totally forgot about. I totally forgot about the McCain vote.
Yeah.
I totally forgotten that you'd walked into that back in 17. How did that complicate things to get taxes done?
Well, it highly complicated things. You know, we all thought on the economic team that we were walking in, we were going to, you know, January 20th, we were going to start on tax policy. I think all of us got thrown into healthcare, trying to figure out healthcare. None of us were really healthcare experts. None of us had been doing work on healthcare for the prior 3 months trying to get ready to walk in. We'd all been working on tax policy and trying to figure that out. So everyone got derailed for the better part of, I would say, 2 months or 3 months, knowing that we wanted to go through taxes in year one because we wanted to use that budget that existed, and we wanted to use budget reconciliation to get taxes done that year. So every day we were spending on healthcare, we were losing a day of tax policy, which was, you know, it was anxiety creating. Let's put it that way. So we were trying to get rid of the healthcare issue as quickly as we could.
What's going to be the priority when they walk in January this time around? Is it going to be tariffs or is it going to be cutting taxes?
So I think there's two priorities day one. On the economic side, and you'll argue there's both economic. I think it's going to be taxes because, again, you've got a deadline. Remember, the personal side of the tax policy ends at 12 midnight, December 31st, 2025. So there is a forcing function. And Washington operates really well with a forcing function.
They need deadlines.
They need deadlines. They need deadlines.
They're like journalists.
Well, I don't know about journalists, but I know about Washington. They need a deadline. There is a hard and fast deadline. Now, look, they could extend it, but that would be another act of Congress to extend it. So they have a firm deadline in place. So number one thing on the, I would say, the economic policy front is they're going to deal with taxes. Number two is, I think, simultaneously, we could argue this is economics as well. They need to deal with the immigration policy. You know, I think we will see Trump come back to many of the executive orders and many of the policies that he had going out on January 20th. He will reinstate all of those policies to shut the border and at least stop the flow of illegal immigrants in the United States. So I think they will work on both of those simultaneously. I do think there will be some tariff policy going in there as well. And I think the tariff policy that will be relatively easy for them to go on is to tariff things that we are currently manufacturing in the United States, where you would put tariffs in place to protect jobs and protect the products that we are currently making in the United States.
Okay, so personnel policy, we have 2 out of the 3. We have a border czar, he's announced, and we also have Howard Lutnick going over as to commerce. What is going on with the Treasury pick? We have 3 men who I've been told the president thinks are of high caliber. Scott Bessent, Mark Rowan, Kevin Warsh, in Palm Beach yesterday, having these conversations with the president. You know how he operates. Why is this pick taking so long? If he ran an economic agenda campaign.
So I think you just answered a little bit. He ran an economic agenda campaign. This is in his opinion, this is one of the most important, if not the most important pick he is going to make. So getting it right is important. I'll also remind you something. We'll go back to 8 years ago. The economic picks were made the week after Thanksgiving. I was hired the week after Thanksgiving. Mnuchin was put into his job the week after Thanksgiving. So the transition team is a couple weeks and probably a month ahead on most of the picks. So, you know, we've all got this anxiety because, look, this is a second-term president, so he knows how to get stuff done quickly. But if you think of what happened 8 years ago, those picks were made in the last week of November, first week of December, and we were all ready to go in our chairs, in place by 12 noon, January 20th. So there's plenty of time to get it right. And I think the president knows, the president-elect knows, getting the right person is more important right now than getting the pick done today or tomorrow.
Do you think it's a name that I have not reported on?
Look, I'm not involved in the process. I think the president will put any and every name that he thinks can do the job well on the list, and he will choose what he thinks is the best person to do the job.
Do you think it's feasible for President-elect Donald Trump to achieve his goals of the tariffs that he's put out there while acquiescing or creating some calm in the bond market?
Look, we will see what actually happens in policy. You know, as I always remind people, what you say to get elected and what you do in actual policy are 2 different things. You know, Americans like to hear what your ultimate idea is to get done, but we've got a very rigorous policy process in the United States. We've got a House, we've got a Senate, we've got lots of constituencies, and when it comes down to actually executing and implementing policy, it is not exactly what the president wants. In fact, every piece of legislation is a compromise. There's no perfect piece of legislation in America because at some point people have to compromise. So we'll see what the president can get done. I think we're all confident there'll be something on taxes. We're 100% confident there'll be something on immigration, and there'll be something on tariffs. But again, each of these will be a compromise. No one is going to get 100% of what they want.
I guess the reason why people are so interested in the Treasury pick is because people want to understand what that compromise might look like, and the individual might give some insight into that. Do we have a sense, and will this sort of be the ultimate test for you, how much Congress pushes back on some of the picks that have already been announced that are controversial even among Republicans? Will that be sort of a test of just whether the checks and balances will work at the same time when a lot of people are saying this time is different and that this president-elect actually has something of a mandate that is very different than in 2016?
I think every Congress and every president, when they come in and they put their nominations through and they go through the consent process, it's different every 4 years. Every president goes through a different process. You have a different makeup of a Senate. You have a different sort of body. And by the way, the body will be different at the end of this year, and then it will transition. I think it's January 3rd is the swearing of the new Senate. It will change January 3rd in the middle of the process.
Right.
So some of these nominees could actually go through an approval process with this current sitting Senate. Some may go through with a new Senate. Probably the vast majority will go through with the new Senate because it takes time to get the paperwork through, it takes time to get the vetting through. But every one of these events is unique, and it's uniquely different because there are different personalities involved. There's different people went through different elections.
Yeah.
Certain states changed. They became redder. So the senator may or may not be more comfortable taking a certain point of view. So you literally have to watch each of these as an individual, unique event.
So you did mention the financing of the deficit, and that's very interesting to me, especially at a time where you talked about the short-term nature of a lot of the financing. Do you expect that to change, for there to be a lot more longer-dated issuance regardless of where yields are at with the next Treasury Secretary, whoever that may be?
Look, I think it's really prudent risk management to start elongating the debt of the United States and not have to live off very large short-term auctions and not have to live off a short-term demand for treasuries. Like, we're always worried about financing the deficit and what could happen. Like, as a person that grew up as a risk manager running a large balance sheet for a large percentage of my life, you would want to de-risk that. How do you de-risk that from a treasury standpoint? You roll out maturities as long as you can, so you cut down the amount that you have to fund at each of these auctions. So I would think that this administration would want to get that done and roll out maturities.
You've been in the room with President-elect Donald Trump many a time, including to interview. What's it like to interview with Donald Trump?
Well, look, it's always a stressful experience. You know, you're sitting there with the president-elect and a large amount of his team. Like, usually when you're in the room with the president-elect doing these interviews, there's multiple other people in the room. You know, I always reminded myself, I'm speaking to the president-elect, I'm not speaking to the other people in the room. So you've got to sort of block out the other people in the room. But he's rigorous in his questions, and he tends to go multiple different directions. So, you know, he'll go from topic A to topic B to topic C, back to topic A. It's interesting. You've got to be on your game. When you're in there, you've got to be on your game, and he's thinking, you know, in multiple directions. And it's very interesting. And he's always got an interesting spin on things. You know, I think the President-elect Trump is one of the best marketers and branders I've ever seen. So when I'm always talking about an answer and how I would think of something from a policy standpoint, he's talking about it. How is he going to sell this to America, and how is it going to affect people, and how is it good for the country? And he's thinking of it in that term. So we're always having an interesting conversation where I'm thinking about it from an economic policy, markets policy standpoint, and he's thinking about it from how do I sell this and how do I get momentum for this?
Some space in the media are describing this process as looking for a yes man, someone who will just say yes to some of his policy proposals, including trade. You had disagreements with him on trade. You were very open about that. We were all aware of it at the time in the first term. How open is he to those disagreements?
Look, I believe it's the job of an advisor in the White House to tell the president the truth and tell him things that he doesn't want to hear. No, you get to tell him plenty of things he does want to hear. You know, like it was always fun to go in there with the economic data. You know, you get the economic data the night before it's released. And there were many nights where I got to go in there and talk to them about the economic data, what it was, how good it was, how the markets were going to react. Those are great conversations. But along with those great conversations, you get to go in there and have conversations that say, hey, look, if we do X, I think the reaction is going to be this. Are we prepared for this intended or unintended consequence? And I think those are the jobs of the people that sit in the White House as advisors, to make sure when the president does something, they understand the intended and unintended consequences. A president should never be blindsided by a decision.
When it comes to the check and the pushback on Trump 2.0, John talked about this his first 4 years all the time, the Trump put. It was the stock market that he cared about. He would reverse course on potentially something he wanted to do, an executive order, just because he saw the fallout in the financial markets. What's going to be that check this time?
I think Trump is going to care as much about the stock market these next 4 years as he did the first 4 years. That is a benchmark that he will measure himself. It's a very public benchmark. It's one that he uses. He talks about it in every speech. He's already started talking about it in the transition, how well the market's done since election night. I don't think that will change over the next 4 years.
Do you think the bond market takes on additional importance? We started this whole conversation about the difference between now versus, say, 2016-17, certainly in fixed income in a very different position.
Look, I think the bond market deserves a long discussion here. I think there's a lot going on. When I talked a little bit ago, where Fed funds were at 76 basis points, where they're 4.5% now, that's only half the story. We had a flat yield curve, and then we've gone through an inverted yield curve over the last 4 years because everyone was worried about a recession. And now we're going back to something that we forgot what it is, called a normal yield curve.
How steep is a normal yield curve?
Yeah, like at least you've been around long enough to ask a question, how steep is a normal yield curve? Because a lot of people don't even remember a normal yield curve is steep. We've seen since the Fed started cutting interest rates, 10 years have gone up 60 to 70 basis points. I'm not surprised by that. I think we're renormalizing a yield curve. If we've taken recession fears off the table and the 10-year is going to go to a normalized rate of, let's call it 3.5%, there has to be at least 100 to 125 basis points of steepness in Fed funds 10 years. I think it's at least 125. If we're going to 3, that's at least 4.25. If we're going to 3.5, we're talking 4.75, and we're going to continue steepness out the curve. And that's before we get to what I consider a pretty large refinancing wall coming up in 25 and beyond. I think many people forgot that, 2020, the COVID year, we did a lot of refinancing in the market, but most of them were 5-year refinancing. So a lot of that COVID paper that was done at pretty favorable rates, because the Fed, again, went into very accommodative policy.
Yep.
A lot of that COVID paper comes due next year. So we've got a lot of refinancing coming due in 2025. So I think the yield curve smartly and normally is starting to re-anticipate what's going to happen in the bond market.
We could talk all morning. Let's do it for an hour next time. It's good to see you, sir.
Great seeing you.
Appreciate it. Gary Cohn there, the IBM Vice Chairman and former Director of the National Economic Council under Donald Trump.